Hello everyone. Today in this module we will study about fund-based accounting for a NPO, not for profit organizations. Let's start with that. Fund-based accounting. What do you mean by fund-based accounting? It is the accounting treatment for specific donations. How the specific donations, these will be dealt in the final accounts of a NPO, that is your fund based accounting. So accounting for specific donations, it is known as the fund based accounting. So the amount that you have received by way of specific donations that cannot be used for any other purpose. Like you have received donations for building, then that amount you can use only for the construction of building. If you have received donations for organizing matches, then you can use that amount only for the match expenses, not for any other purpose. So any of such amount that will be credited to a separate fund account, that will be kept separate, so that that can be used only for that particular item. And all the expenses related to this specific donations, these will not be debited to income and expenditure account, these will be debited to this fund account. So, what is accounting for specific donation? What is fund-based accounting? It is the accounting for specific donations, amount received by way of specific donations that will be kept in a separate account, and all the expenses related to this item that will be debited to this account only. Now, let us discuss some practical examples to better understand this concept fund-based accounting. How actually we perform this fund-based accounting while preparing final accounts of a NPO. Let's start with that. This is our first example. How the following items will be shown while preparing final accounts, means income and expenditure account and the balance sheet of a club as at 31st March 2019. Sports fund as on 1st April 2018. It is given to be 5 lakh. That means in the beginning of the year, the NPO, the club has rupees 5 lakh balance in its sports fund that it can use for the sports activities. And this balance is not in the form of cash, that is being represented by sports fund investments. During the year, interest received on these investments, this amounted to rupees 37,500, and donations for sports fund that you have received during the year, rupees 1,20,000, and out of this sports fund you have awarded prizes amounting to rupees 1 lakh. How will you show these items in the final accounts of a NPO now? Let us do it step by step. First of all, sports fund balance. So, in the beginning of the year, sports fund balance, sports fund. So, the opening balance. How much is the opening balance? 5 lakh. And sports fund investment that you will keep on the asset side. 10% sports fund investments. Next, interest received on sports fund investment. Now, out of this fund's money, if we have invested outside the NPO, then whatever interest will be received, that will not be a general income. That will not be shown in the income and expenditure account. That is the income related to this fund. So, it will be added in this fund only. So, here you will add interest received. 37,500. Now just check, have you received the total interest from this point? 10% investments of rupees 5 lakh. That means during the year you should receive total interest of 50,000. But in cash you have received only what amount? Rupees 37,500. What about the remaining? That is the accrued interest. That is income to be received. So it is being income. It will be added in the sports fund balance, accrued interest, and because it will be received in future, so it will be shown on the asset side, accrued interest. I am again repeating this point. Whenever interest received on investment is given, that will be added in the sports fund. And just check whether you have received the whole of the interest, or is there any implied adjustment. So 10%, that means total interest should amount to 50,000. But how much you have received during the year? 37,500. So what about the remaining? Remaining will be the accrued interest. Next, you have received donations. So received donation for sports fund. It will be added in this donations for sports fund. How much amount you have received? 1,20,000. You don't have to show the position of the cash. Only other accounts which will be affected by these transactions. Next one is your sports prizes awarded. So these will be deducted from sports fund balance, sports prizes. So at the year end, how much balance will be left in the sports fund? That you can calculate. This is how you can solve this question related to fund based accounting. You will be given sports fund, opening balance 5 lakh. Investment is given to you, fund you keep on the liability side, and investment you keep on the asset side. Then whatever interest you have received, that you will add in the sports fund. And check this percentage, and if there is any accrued interest, once you will show on the asset side, and because it is an income for the organization, so it will be added in the sports fund balance. Then whatever donations you have received for this account, that will be added in this account, and if any expenses are made out of this account, that will be deducted. This is how you can proceed with your question. Now let us discuss second example. Again you are given match fund in the question, rupees 4 lakh. During the year you have received donations rupees 2,40,000 and sale of match tickets rupees 3,60,000 and match expenses are given to be rupees 8 lakh. Then how will you show these in your final accounts? Again, same procedure we will follow. First, you will write down match fund. What is the opening balance? Yes, it is given to be 4 lakh. Next one, donations. How will you treat the donations? Again, it will be added in the match fund. Add donations. 2,40,000. Then sale of match tickets, it amounted to rupees 3,60,000. Because for match expenses you have a separate fund, match fund. So whatever income, whatever expenses related to matches will be there. That will be, if income, it will be added in match fund. If any expense, that will be deducted out of match fund. 3,60,000. And out of these, what you will deduct? Match expenses. How much expenses? 8 lakh. So final balance that we will show in the balance sheet, that will be 2 lakh. First opening balance, then add the donations, add other incomes related to matches, and out of these whatever expenses are there, that will be deducted. Now let us assume here match expenses are given to be 11 lakh. Then how will we solve the question? What's the problem? We have total balance of 10 lakh, but expenses are of 11 lakh. Then how will you show these? Just see here. Because out of match fund, how much expenses you can cover? Only 10 lakh. So from here you will deduct only 10 lakh. And remaining expenses of rupees 1 lakh. There is no separate account for that. So that will be shown where? In income and expenditure account. On which side? On expenditure side. To match expenses. So that you have to keep in mind, if expenses are more than the amount of the fund, then whatever amount can be covered out of the fund, that will be covered out of the fund, and rest of the amount will be shown in the income and expenditure account. Now let us take one more example. Now the difference is, the fund is not for any revenue expenditure. Like till now we have studied the prize fund or scholarship fund may be there, charity fund may be there. These are the funds for revenue expenditures. But sometimes there you may receive some specific donations for the purpose of construction of some capital assets like building, pavilion, auditorium. Then how will you show these items? Donations for capital expenditure. I am repeating again. Okay. So this is the statement given in the question. You are given capital fund balance, building fund balance. During the year you have received donations 6 lakh, and out of this amount of building fund, how much you have spent on the construction of building? Rupees 3,60,000. Construction work is still in progress. How will you show? Now let us start with the question. Capital fund. How much balance is there? 10,80,000. Then building fund. It is 4,80,000. You know how to treat the donations. Donations will be added. On asset sides, these are already added in the cash balance, that you don't have to show here. Okay? And you have to show in which account these will be added. These will be added in building fund. Now, during this year, you have spent rupees 3,60,000 on the construction of building. Okay, so you will deduct this expense from here, 3,60,000. But if you have spent this amount, that has resulted in construction of a capital asset, fixed asset, building. As it is under progress, so you will write down here building in progress. How much amount you have spent? 3,60,000. But that amount which you have spent, that has given you a capital asset worth rupees 3,60,000. So the value of the business has increased by 3,60,000. This will be added in capital fund. So here, but you will write down transfer to capital fund. Why we are writing transfer to capital fund? Because this amount has been spent and that has converted into capital asset. So this amount will be added in the capital fund. Here you will write down transfer from building fund. So the final balance this is how you can show the treatment of donations which are received for construction of capital assets. I am again repeating, just keep in mind, first write down the opening balances. Whatever you have received, you will add here. Whatever you have spent, you will deduct from this side. But as it is the fund for capital assets, so if you will spend something, that will give you something in the form of capital asset. So that amount will be added to the capital fund. This is how you can proceed with the fund-based accounting. So in the next module, we will study about the treatment of subscription. Till then, good day to all of you.